Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. And if you've been watching it all, you know it's been a wild couple of weeks. You can look right here on the chart and see we have been on a massive slide for the last couple of weeks. Things seem to be good for quite a while, but whether it's tariff talks or whatever, who knows? The market has crashed quite a bit, and you can see because of that, volatility has spiked. Now you're going to see they're all about the same. This is the S&P 500, and you can see volatility is right around here at 46, up here at 47, right around that. If we look at the NASDAQ, it's going to look almost exactly the same. Same 46, 47, IV, same look as well on the graph. And the IWM, the Russell, looks the same as well. We know it's been down below its highs, but it's had the same movement otherwise, and also around 46, 45 on this one. So, what are we going to do? Well, the market has been extremely volatile, right? So when things get volatile, we like volatility, but there's also a fear with volatility because that means they are big swings. Big moves can happen. So what we do when things get this hectic, when they get this volatile, is we continue to trade because we are looking for volatility, but we're going to keep our size down. We're not going to trade a lot. So we're going to make our trades smaller than normal because things can move a lot. We don't want to lose a lot of money. We can obviously win money, but we can also lose a lot more, a lot faster. So, number one rule when things get this volatile is just be careful. Bring your size down a bit and just be aware that things are going to have big moves. So, you're probably going to take a lot of losses along with some wins along the way. So, for me as well, when things get this volatile, stocks are usually way more volatile as individuals than these ETFs, which are groups of stocks. So, when the whole market as a whole gets volatile, I tend to stick to the ETFs to trade because they have volatility, but again, one stock can move a lot further in a day than 500 stocks lumped together. So just personally, I consider that just a safer trade because again, you're not just trading one random stock that could do anything crazy. This is a compilation of 500 stocks, or in the NASDAQ it's 800 stocks lumped into one. So, what are we going to trade? Well, I'm going to stick with the SPY this time for a couple of reasons. Number one, all the volatilities as you saw are about the same. All the indices have moved about the same. But another key to trading in high volatile markets is liquidity. When things get really volatile, the liquidity, so I'll go here, the liquidity meaning the bid-ask spread of things can change quite a bit. It gets much wider. So I'm looking at the S&P 500. We're just going to go out here and you can see right here 1461, 1470. Alright, that's only 9 cents. But if I went to, let's just say I'll go to a random stock like Facebook and look at the same thing. Look here, 2860.37. It's almost $9 wide as opposed to 10 cents. That's what I mean by liquidity. When the market gets highly volatile, people freak out. People who price these things don't want to lose a lot of money, so they leave themselves a big cushion because this cushion, the cushion between these numbers, is where they get a jump on you. If you buy or sell this thing for somewhere outside of the mid price or as close to mid price, anything beyond that is just a cushion in their pocket, right? You're paying up or down beyond what the normal mid price might be. So, in order to avoid liquidity problems for now, I'm going to the most liquid stock or ETF in the world, which is the S&P 500. So this is the most liquid thing in the world. So if you're going to trade anything in the highly volatile market, SPY, QQQ, IWM, these are your best choices because they're the most volatile, most liquid stocks in the world. I know they're ETFs, but essentially they're stocks. So in this case, where am I going? Again, for liquidity reasons, normally I'd go here to 47 because tomorrow would be 46. But when I looked at these strike prices, it didn't have all the numbers I'm looking for. You can see it goes single digits here, and then it goes off to $5 wides over here. And the same on this side. When you go to the call side, it goes single digits and it jumps to 5. I'm trying to make this trade as small as possible. I'm trying to make a $2 wide iron condor because this market is so volatile, and I want to keep my size down. So in the end, what I did was I went to these ones, the 39, because these, where I'm looking to trade, have the $1 wide strikes down in this area, and so I can make a simple $2 wide iron condor as opposed to being forced to make a $5 wide one. That's the reason. Now they're still liquid because it's S&P 500. You can see they're only like 8 cents wide, so this is still very liquid. Still fits our rules. 39 is going to be 38 tomorrow. Still in our 45-day window. Not right here, but again, for liquidity reasons, I'm going to go here. I can find the strikes I want, and it's still highly liquid. So I've already preset the strikes, and just to kind of show you, I'm selling the 545 and the 605 as my range. So if we go back to this chart, just to kind of see where I'm at, 545 would be right about down here, and 605 would be kind of all the way back up here. So you can see, except for a couple of blips, the S&P 500 has been in this range for almost the entire year. Actually more than this year, all the way back to, let's say, October. So the other thing about volatility and why we like it is you can see, look how wide this is. And that's because it's highly volatile. Visually, what volatility means is we can get further away from the strike price and collect the same or more money. So for example, if the volatility was down here, the range might be like this. That's how volatility affects us. Back when volatility was low, if I was to put an iron condor, you might get about this wide in order to fit our rules. But now, because volatility has spiked, look what happened to the size of our trade, the width of our strikes, the range we're looking for. It's widened out. And that's why we like volatility. Yes, it's volatile. Yes, we care about size. We're very careful. But it also gives us a much bigger range to be right. That's why volatility is so much part of our trading. So let's go back to the trade page, and I'll show you the trade I set up. Again, I sold the 607 call and the 545 put. I think I said 605 on the other page. 607 was where we're at. Let's just see. 607, yeah, way up here. So again, my range is between 607 and 545. If the stock stays there for the next 39 days, this will be a winning trade. I'm turning this into a $2 wide iron condor by buying the put and call $2 away. As long as I collect at least 66 cents or more for this trade, that is a valid trade. So when SPY opens up tomorrow, we're going to go roughly $30 up and $30 down. That's kind of where we're at on the put and call side. Make a $2 wide iron condor, and we're looking to collect 66 cents or more to make this a valid trade. So that is why we're making this trade, because of the way the market is. Again, we're sticking to ETFs. It's highly volatile. We got a nice big range. We're sticking in this particular expiration cycle because there's more strikes, more liquidity, as opposed to the 45-day one. The 39-day one has all the better benefits for us as far as strikes. These are how you adjust your trading to fit the market and still keep your rules in place. Hopefully that makes sense, everybody. Good luck this week. We'll see what happens. It could be a crazy one as well. Take care. Hello everybody, Cal here with an ancient Chinese proverb which I'm sure you have all heard before. Give a man a fish, you feed him for a day. Teach a man to fish and you feed him for a lifetime. Why am I telling you this? Because most services out there just give you a fish. They tell you, oh, make this trade, I made this much money, I made millions of dollars, do this, do this, do this. That's not my goal. My goal is to teach you to fish for a lifetime. I want to teach you the skill of trading so you can go out and make as much money as you want to on your own. And the best way I've come about to do that, at least for me, is to basically set up an alert system where you can watch me trade in real time. You'll get texts or emails directly to you in real time of the trades I make every week. I do 2 to 3 trades a week, so it's going to tell you everything you need to know about the trade. Why I did it, how I did it, what I did as far as specifics. And then you're also going to get the closing alerts when I close them for the maximum profit potential on these trades. Like, how do I close these trades? Why do I close them? To get the best profit potential over time. And I want you to do it without any risk, which is why I've set this up for $1 for the first month. You'll get my option income alerts for the first month for only $1, and you can cancel anytime, so there's no risk on this one. You're risking $1 to see if you can turn that knowledge or learn to fish. You'll use this code, make B1. If you want more, we have the option pro alert, which is the exact same alert, but it also gives you access to every course and webinar I've ever made. It's a 13 course bundle, obviously thousands of dollars in knowledge. Again, you can do this using this code, and this is only $19 for the first month. And again, you can cancel this one at any time. So again, a risk-free attempt to learn and see if it's something you want to do. Here they are right here. If you want to go do it, you can go to sharpertrades.com, go to the products page. These two will pop up. You can type in these codes down here,
or you can just go directly to this link right here and it'll build the code in itself, or the attachment I have at Udemy along with this little video. So again, my goal is to teach you to fish. I can't think of a better way to do that than to trade side by side with me in real time. Hopefully you jump on this opportunity. Hope to see you soon. Take care.